Hello everybody, this is Aaron Giampetro from the Morningstar Packing Company. Each year we take a step back from the execution of a crop and look at the broader forces that are shaping the processed tomato industry, both here in California and abroad. This year we broke it into 3 videos, the first being our raw material supply chain environment, the second being the water situation in California, and the third being a supply and demand outlook for California processed tomato products. Today we're joined by Mark Delamater for what will be a very good conversation on the current crop situation relative to supply and demand of California processed tomato products. Mark, thanks for joining us.
Oh, thank you.
So let's jump right in.
Okay.
The January Crop Intentions Report was published on January 23rd and showed that California growers and processors were intending to contract 9.8 million short tons, which is a sizable decrease from the 2025 crop actual result of 11.6 million paid short tons. Within that, the mechanics of the tonnage show 53 paid tons per acre with 185,000 acres. So looking at the historical execution of California's January versus final, what does the history tell us about the probability of actually hitting these estimates that we make in January?
The 2025 yield was absolutely an outlier, by any historical standard. And so I don't think it's a good idea for us to anchor our estimates, to that number. And when you look at 2025, the closest year for comparison would be 2018. 2018 had a 10% increase year over year from the prior year, compared to 2025, 16% increase.
Wow.
And at the time, 2018 was considered an outlier. So, that kind of puts it in perspective. But more important than the actual 2025 result is the forecast for 2026. And again, if you go back to 2018 and you look at 2019 yields immediately dropped back to the long-term trend line. They didn't stay elevated. Whereas when you look at the 2026 forecast, the 2026 forecast is still about 7% above the long-term trend line. So, while it's not impossible, it certainly does seem that the current estimated yield, and therefore the current estimated forecast of 9.8 million tons, is overstated. In addition to the yield concerns, California has tended to overestimate in its initial forecasts relative to what ends up being actual production. And when you look over history, about 3 out of 4 years, California tends to overestimate the final outcome. And when we do overestimate the final outcome, we're overestimating by about 6%. So when you combine the look at the yield trends along with California's record for forecasting, to me it would look like the current 9.8 million ton forecast is overestimated or overstated by anywhere between 3 to 6%. And that would equate to about 300,000 to 600,000 tons. So, having said that, I guess the question is, should we be concerned about product availability in the 2026 season? Mm-hmm. And I think that then leads us to potentially talking about the December 1st CLFP report.
Interesting point is the January intention is taken in context of California's inventory, and we know from the December 1st CLFP stock on hand reports that the record high 2025 crop seems to have continuously inflated our projected ending stock on hand levels for California.
Yeah.
So the reduction in tonnage is one strategy. The other that complements this inventory is demand. So before we really dive into the CLFP numbers, it'd be great to know how demand is faring for California processed tomato products, particularly as it relates to the domestic and the export markets.
We think the outlook for demand for processed tomato products domestic demand looks to be flat and stable. And that's both for industrial paste as well as for other processed tomato products. Our current outlook is that domestic demand for total processed tomato products will be somewhere around 9.4 million raw ton equivalents in 2026. When we look at export demand, we see that slightly increasing, and that slight increase is really being driven by exports of industrial tomato paste outside of NAFTA. And currently, what we see is total exports coming in at about 3 million raw ton equivalents for 2026.
So even though the U.S. is a net exporter of processed tomato products, imports continue to be part of our environment that we work in. They tend to vary in intensity given different conditions in the market and the economy and the consumer wants. So what are we currently seeing with processed tomato imports in the United States?
Imports will always be part of the landscape. But the recent Liberation Day tariffs have caused importers to respond by reducing prices in order to offset tariff costs. And that's definitely tightened competitiveness in that marketplace. Imports of industrial tomato paste only account for about 3% of total U.S. demand. So relatively small player. We see that being flat to slightly down in this coming year. Of bigger concerns have been imports of processed tomato products in the retail and food service segment. That's been growing over time, but we think we see this beginning to decrease, partly because of the tariff issue. And we think we'll see those values going down in 2026 relative to 2025. But even with the slight decline, imports in the retail and food service section will still constitute about 25% of total domestic demand in those segments. So when we look at industrial paste and products other than paste combined in all segments, we're estimating about 1 million raw ton equivalents of imports coming into the U.S. in 2026.
So when it comes to exports and imports, tariffs will ultimately impact performance, but so will currency and the strength of the U.S. dollar, relative weakness of the U.S. dollar. So how has the change in currency value, particularly with the U.S. dollar, shaped the competitive environment we've seen in the last 12 months?
Yeah, and absolutely correct. I mean, we know currencies, relative exchange rates have a huge impact on competitiveness in the export marketplace. Over the last 18 months, we've seen the dollar weaken against the euro, Chilean peso, British pound, and other currencies. But not to the extent that we saw back in the 2008 to 2013 period, which was a period where the currency really drove exports. But still, the decline in the dollar value that we've seen over this last 12 to 18 months has definitely provided some positive tailwinds for U.S. exporters, making us more competitive, especially in the European and UK markets, and especially when competing against Chilean imports.
So maybe not quite yet an outright advantage, but certainly creating some opportunities for those sales abroad from California.
Absolutely.
So now that we have a good snapshot of demand, and we know a little bit about supply and some of the production intentions for 2026, we can go back to that CLFP stock on hand report and try to give it a bit more color and frame it in context of what does it mean for California at the moment when you project the stock on hand to June 1st of 2026. What do we see in this December CLFP stock on hand report that would tell us where we project that we'll end up at?
If we start with the December 1st stock on hand, and then we add to that our estimate of California production, and we add to that our estimate of production from the rest of the United States, and we add to that our estimate of imports into the United States, we come up with our estimate for what total supply coming into the U.S. Then if we take our estimate of both domestic demand and export demand, add that together, we've got our estimate for total demand in our marketplace. Then if we subtract our estimate of total demand from our estimate of total supply, the difference we get is what our estimate for the ending stock on hand, in this case ending stock on hand going out of 2026 would be. If you look at the left chart, that chart is based on the assumption of the currently forecasted California production of 9.8 million raw ton equivalents. The chart on the right is based on the assumption that California production ends up coming in at 9.2 million raw ton equivalents as the result of not hitting the currently projected yields. When we compare those two charts, we'll see that if you look at the difference between the projected California production between the one scenario and the other, that's exactly equal to the difference in the projected ending stock on hands between the two scenarios. And when you look visually at the two scenarios and focus on the total demand column, you'll see in both scenarios, even the scenario with the significantly reduced California production, there's more than an ample buffer relative to what the expected total demand is.
So thank you, Mark. That gives us a really good impression of some very key takeaways from the processed tomato industry at the moment. First seems to be that demand signals remain constructive, but the key question is whether California can sustain sales momentum while prioritizing drawdown of prior crop inventory amid a smaller 2026 pack.
Right.
Second point seems to be that supply is sufficient to manage any sort of yield variability or production risk in California. And the third is that the weaker US dollar is supporting exports, while tariff and currency dynamics continue to pressure processors importing into the US or selling in US dollars.
Yeah, I think great summary.
Well, thanks again for joining us. We will be back in the spring as we resume our normal Tomato Bite format, as we start covering transplanting and the various activities that are leading up to the 2026 harvest. Thank you.